Welcome to the Deep Dive. Think of us as your personal research assistant. We take that stack of sources, you give us articles, profiles, decks, and we pull out the key stuff.
Yeah, the essential insights distilled just for you.
Exactly. And today, we're diving into the creator economy. Specifically, a company called Echo.io.
Right. We've got the sources you sent over, a LinkedIn profile for the founder, a pitch deck for the company, and a startup profile from Unicorns Club.
So our mission today is to cut through these docs. We want to figure out, okay, what is Echo.io? What's the problem they see for creators?
And what's their solution? They've got this term, content capital. Sounds interesting.
Definitely. And we need to see where they actually are in their journey based on this material anyway.
So yeah, we'll unpack it all, highlight the important bits, the interesting details, give you the fast track.
Okay, let's get into it. I always like starting with the people. So the founder, Jerome Renard, his LinkedIn profile is pretty revealing.
What stands out?
Well, it says 18 years in the creator economy. Not just building tools for it, but like living it, mixing records for artists, tech consulting, and music. That feels different, right?
Yeah, absolutely. That's someone coming from inside the space. That perspective, having navigated the messy reality of being a creator firsthand, that's got to shape how they approach building a solution.
Totally. It's not just looking at market data, it's lived experience. He's got this blend too, sound engineering, electrical engineering background, creative and technical.
And that mix shows up now, right? Founder at Echo.io, but he's also listed as an Angel Squad member at Hustle Fund, even a stealth startup mention.
Yeah, based in LA, big creative hub. Profile mentions he's an immigrant too. It paints this picture, someone deep in the creative scene, but also plugged into the whole startup and investment world.
Right. That combination, practical creative work, the tech foundation, and now seeing the finance and startup side gives him a pretty unique viewpoint, I'd imagine. He gets the artist struggle and the business mechanics.
Okay, so let's talk about that struggle. The challenge Echo.io is tackling. The sources, the pitch deck, and the Unicorns Club profile, they throw out some massive numbers.
Huge numbers. Over 300 million creators, generating over $100 billion in revenue. The whole creator economy valued at, over $250 billion?
Exactly. Massive scale. But then they hit you with this phrase, booming but broken. Is that fair? Broken with those kinds of numbers.
Well, that's the key question, isn't it? They're not saying creators aren't making money. Clearly, it's booming. But broken seems to refer to the financial infrastructure around it.
How so?
The sources point to a few things. Limited access to, normal financial stuff, loans, mortgages, because creator income, often seen as unstable, unpredictable.
Right. Feast or famine sometimes.
Then there's the fragmentation. Money comes from everywhere. YouTube, Patreon sponsors, merch, maybe royalties. Trying to manage that cash flow, it's apparently a nightmare. And the big one they mention, unfair content valuation. Basically, the actual value of the stuff creators make isn't easily recognized in, traditional financial terms.
Okay. And you can see how his music industry background feeds into this. Dealing with artists juggling touring money, streaming pennies, merch sales.
Precisely. That fragmented reality is probably core to why he sees a need for something different. For you listening, imagine trying to get a bank loan when your income swings wildly and comes from 10 different sources. That's the pain point they're describing.
Right. So understanding that problem, this booming yet financially broken market, what's Echo.io's big idea? How did they propose to fix it?
Okay, this is where they introduce their core concept. They call it content capital, and they frame it as FinTech 3.0.
Content capital.
Yeah, and here's where it gets really interesting, like you said. The core idea is making content itself a bankable asset.
Bankable, like you can take it to the bank.
Sort of. Instead of just seeing content as, maybe generating some ad revenue down the line, they want to treat it like real estate. Or stocks, something tangible you can value, maybe even borrow against.
Wow, okay. Content capital. But how does that work? How do you actually put a dollar value on a YouTube channel's influence or a song?
That's the tech piece. The deck says content capital is powered by a machine learning model, an ML model.
Okay.
And this model crunches a ton of content data, market influence metrics, stuff like that. The whole goal is to get to a fair valuation of the content, moving beyond just follower counts to see it as a real financial asset.
So the ML looks at what? Engagement rates, past project impact, maybe sales driven by content, historical earnings.
Exactly. Things like that. It's trying to build a quantifiable measure that says, okay, based on this creator's track record, audience engagement across all their platforms, Their body of work, or maybe even their next project, has an estimated value of X.
And that number, that X, that's the key.
That's what they believe makes it bankable. If you can put a data-backed value on it, then maybe you can get financing against it. Content-backed lending.
Like a mortgage, but against your YouTube back catalog instead of a house.
Kind of. It's meant to bridge that gap between the content world and the financial world. Power new investment models. Give creators financial flexibility based on all their assets, not just a recent paycheck.
So for you, the listener, if you're a creator, suddenly your past work, your audience, it's not just potential, it's something you could maybe leverage financially now.
Exactly. It could really change how financial institutions look at the whole creative sector. Potentially transformative.
Okay, so that's the big idea, content capital. How does Echo.io actually package this? What's the platform and, how do they make money?
The sources describe it as a kind of seamless blend. Banking features, content tools, and community stuff all in one place.
All into
Yeah. And the revenue streams listed. Several angles, interchange fees, probably from cards or payments, APR spread, and financing revenue that points directly to the content capital lending idea, and a subscription model.
Right, subscriptions make sense. Are there different levels?
Yep, they mentioned 3 tiers in the pitch deck. A free one, basic tools for managing money, seeing analytics. Then a subscription tier, more advanced features, probably tapping into that content capital value or investment stuff.
Yeah.
And then a business tier, all the features, plus like concierge services for managing assets and investments for bigger creators or businesses maybe.
So they're betting on both usage, transactions, subscriptions, and that core content capital lending piece.
Seems like it. They need that content capital concept to really work as a financial asset for the model to fly.
The Unicorns Club profile also mentioned some product values they apparently validated.
Yeah.
What did those tests show? What do creators actually want fixed?
Yeah, those are interesting. They really echo the problems we talked about, like provides access validated by the ML model valuing content, meaning creators felt like, okay, this does open doors financially.
That's huge validation.
Definitely.
Yeah.
Then reduces anxiety linked to financial tools for managing cash flow. It tells you that unpredictable income, not being able to use your work for loans, it's a real stressor, not just theoretical.
Yeah, makes sense.
Simplifies was about bridging the finance and content data. And makes money pointed to using AI for insights how to optimize your creative work for revenue.
Getting that real-world validation through tests and partnerships is so important at this stage. Okay, shifting gears a bit. What about the team and the company's status right now?
The Unicorns Club profile lists a team of 6. Small, lean, 2 in engineering development, 2 in operations, 1 data analytics, 1 marketing sales.
And the pitch deck added some flavor on backgrounds, right?
Yeah, mentioned experience from places like Microsoft, Seiko, Goldman Sachs, JP Morgan, even former heads of partnerships, and someone from Amazon Music VR.
So a mix. Deep finance knowledge combined with people who get the creator and tech side.
Trying to build that bridge, like we said. Makes sense for what they're attempting.
The company is Echo.io, Inc., US-based. Sources has slightly different start dates. May 2024 operational start versus Jan 2025 incorporation, but that's pretty normal.
Yeah, paperwork versus getting going.
The Unicorns Club profile used those readiness levels. Can you break those down? What do those numbers actually mean for where Echo.io is?
Sure. Their scores out of 9, kind of a snapshot. SRL 69 for product market fit means they're actively testing with real users, validating the need. TRL 69 suggests the team is ready for this phase.
Okay.
BRL 49, initial business model is set. IPRL 59, they've started on IP protection, patents for content capital likely. CRL 69 confirms customer testing shows the benefits are real. And FRL 79 means they have a strong investment case, actively talking to investors.
So putting it all together,
Yeah.
They're past the idea stage, they're in the market testing and validating, and they're geared up to raise money.
Pretty much. They're right in that crucial phase of proving the concept works and getting ready to scale.
Right, so speaking of scaling, let's look at their roadmap and that fundraising effort. The pitch deck laid out phases.
Yeah, pretty clearly. Phase 1 was MVP, getting beta users, patent stuff sounds like that's mostly done.
Okay.
Phase 2 is now, the official launch, driving growth, a big creator campaign, marketing, events, that's the focus.
In phase 3.
That's the future vision. Fully rolling out the content-backed finance, going after enterprise deals, longer term.
Their go-to-market is launch bold, scale smart, a bit buzzwordy, but okay. With user targets, 1K, 5K, 20K plus users.
And the marketing strategy sounds very creator-centric. Users co-creating with them, building trust, expanding organically, Community-led growth.
Fits the audience for sure. And they project profitability within 3 years, according to the deck. Ambitious.
Very standard startup projection maybe, but ambitious nonetheless.
Okay, finally, the fundraising details. What did the sources say?
They're raising a seed round right now, targeting $5 million.
$5 million?
Yep. Using a safe note, simple agreement for future equity. Pretty standard for seed stage. Target date mentioned was April 2025, so likely ongoing or recently closed, perhaps.
And how do they plan to spend that $5 million? The profile had a breakdown.
Yeah, quite detailed. 20% each for marketing, sales, product development, and salaries talent. So 60% on those big three.
People, product, promotion. Makes sense?
Then 15% for scaling operations, 10% compliance security, important for fintech, 10% infrastructure tech, and 5% market research data.
Seems like a solid plan for this stage. Investing across the board to build, launch, and grow that user base.
Yeah, it looks like a typical allocation for a company at this inflection point. The current ownership listed was also very early stage. 90% founder, 10% one employee, pre-investor dilution.
And they're using platforms like Unicorns Club to get visibility with investors, keep their profile updated. Standard practice.
Exactly. Showcasing traction, hitting milestones, trying to connect with that global investor network.
Okay, so let's wrap up this deep dive. Based on everything in these sources you provided, we have Jerome Renard, a founder with deep roots in the creator world.
Right, bringing that firsthand experience.
Echo.io has this really ambitious goal. Redefine value with content capital, turning creative work into a bankable asset using machine learning.
A blend of banking, creator tools, community features on their platform, with a clear plan for making money through fees, lending, and subscriptions.
And based on those readiness levels and roadmap, they're actively validating the product, launching and raising that $5 million seed round to fuel growth. Community-led approach, aiming for profit in 3 years.
That sums up what the documents tell us.
So what does this all mean for you listening?
Well, here's a final thought based on this material. If content really becomes a bankable asset like they envision, how could that fundamentally shift the power balance for creators compared to traditional industries? What new opportunities does that open up? But also, what challenges might it create for the existing financial system, which, let's face it, isn't really built to value things this way?
Interesting point. Lots to think about as this whole space keeps evolving. Thanks for joining us on this deep dive.
Step up your game, join the Unicorns Club. Making it rain, nothing ever enough. Invest in the future, watch it all